everyone. We've just opened the webinar. I'll give a few seconds for others to join. We'll start very, very soon. Thank you. Okay, I think we've had enough time. Again, welcome everyone to Vulcan's first webinar for 2026. My name is Chris Marino, the Managing Director and CEO of Vulcan Energy. Great to be back. We've had an incredible 2025, quite a transformational year for the company. Didn't probably get to do enough webinars during that period with real focus of the company in getting ourselves to where we are today, a fully financed, bankable project for Project Lionheart. And now moving forward, looking how we're going to create a wonderful execution of that project and moving forward into the growth part of the company as well, which there is as well. We don't have Francis Verdeen here today. He's traveling, our chairman, but I'm sure you'll be okay with me at the helm. We wanted to give you an update on a few things. Vulcan has obviously been heavily focused on a number of elements of our phase one Lionheart project. But I guess one thing we haven't been able to perhaps focus on is also explain how our strategy and our long-term strategy will deliver value and growth moving forward. Strategic pillars are basically is what distinguishes a company, and we wanted to sort of give you a feel for what they are within Vulcan at this point. We are heavily focused on securing and maintaining financial sustainability, delivering of the phase one Lionheart project, clearly a main pillar for the company, but delivery of growth, and it's something which we'll talk more about in today's update. I guess one of the core things that Vulcan has been, born on is basically sustainability and how we differentiate ourselves through that sustainability. And last but not least, we really believe that delivering on commitments to our stakeholders is something that will differentiate us against our peers. When we translate that into a 5-year plan, clearly we've got a lot ahead of us on Lionheart and delivering that on time, on budget, and really meeting that nameplate capacity. We know that's something that's a challenge. It has been a challenge for many. We believe we've got a head start there, having built an integrated supply chain already in Germany. Future phase development, there's a real task there to see how do we improve and deliver on even higher value projects in the future. We're going to continue to unlock value, both within Europe but globally as well with our own ideally technology, Voltec. We've also got world-class services within Vulcan, particularly our Vercana group, our well delivery group, our drilling company. That is critical to making sure we both protect the value of Lionheart, but also what we see in the future. And last but not least, as mentioned in the pillars, we want to maintain a best-in-class HSC and ESG performance. Something very close to my heart is now we're opening up to a major capital project. We want to make sure that we deliver and we don't hurt people along the way. When we translate all that into a focus for 2026, we sort of see ourselves really in 4 buckets for the company. We really want to deliver phase one. That's obviously a critical part of the company. It's what our value is based on. We want to make sure we deliver on those execution milestones. You will see that we will also focus on a future phase feasibility study this year, where we will deliver what we believe is strong capital efficiency improvements as we move through and understand how do we create a blueprint for improvement in those future phases. We're very, very confident that we've got a technology division and future phase projects that can see a new funding for those. Again, that's part of the growth story for the company that we've been working hard in the background for many, many years. And as mentioned, last but not least, we really want to make sure that we deliver on our health, safety, environmental targets during the delivery of our phase one project. So that's sort of a connection between our strategy and what we're focusing on this year. For those who are new to Vulcan, haven't been part of the journey, I guess where Vulcan really tries to deliver is on an integrated story. It's an integrated story from the resource, which is the brine, to a battery solution, basically creating a battery-grade product at the end. And in our case, we're producing lithium hydroxide monohydrate in phase one. So, on the screen, you see basically that solution. It's a solution on how we target a reservoir. In our case, it's the Bunter sandstone in Germany, in our licensed portfolio. We will look to create a development of both integrated lithium and geothermal energy. And to do so, we drill a number of wells, and then we have an upstream extraction of energy, and an upstream extraction of lithium. That's what we call the GLEP. It's basically the heart and the core of what we're doing here in the upstream. Both of those are obviously value adding, with one final step. On the lithium side, we've only created an intermediate product, which is lithium chloride. It's a highly concentrated product, nearly 40% weight. And the last thing we need to do in that space is then, we need to create a logistics channel down to Frankfurt. It's about 130 kilometers away, where we then convert that lithium chloride into a battery grade lithium hydroxide before we then have the ability to sell that to our offtake partners who are very, very close by within the Central European sphere. That's effectively of that at the end of last year. It's now in construction and we're looking at first production in 2028. This is a wonderful picture from one of our drones showing you what does the upstream look like. And I guess one of the things that should jump out at you is the greenness. We are in farmland, we're in agricultural areas, and we're basically providing solutions to our communities. The people that are working with us, working in these communities, where we're providing energy in the form of geothermal heat, but we're extracting lithium prior to then sending that downstream. It also should give you a sense of the scale. We have these different well sites. You can see in number 3 or number 1, where we have the wells in the ground, and then we connect all these boxes within a form of piping network, which then eventually gets you to our centralized GLEP, our geothermal lithium extraction. This is where will be the heart of what we do within the Landau area. And that's the land we've also secured. So hopefully you can see that we're talking a few kilometers here or there to basically create this supply chain within the upstream. And I think if we then distill that into numbers, and it is about the numbers sometimes. We're obviously trying to create a very competitive, very compelling, and a very economic project, and these numbers sort of reflect that. We're looking at strong NPV and IRR numbers, nearly 2 billion in pre-NPV and around nearly 16% in a pre-tax IRR. This is strong because it obviously shows that even in a low lithium price environment, which a lot of these numbers would have been at the end of last year, we're still showing extremely good economic returns. Importantly for us, though, is that we also now have a capex figure we need to deliver on. It's just less than 1.5 billion. That's the goal for the team at the moment. As we've got boots on the ground, we're starting to deliver on this $1.5 billion project, 1.5 billion euro project. One of the most important numbers to Vulcan, it's what keeps us competitive within the landscape, is our cost of production. When we see a lot of our peers globally, whether it's Rio Tinto's, Eramet, some of the oil and gas companies or other mining companies, this is where we want to be. We want to be at the bottom of the cost of production curve. And at 3,500 per euro per ton of lithium, that's exactly where we sit. So that means we will be competitive in any price environment because we continue to produce at the bottom of the cost curve. So something we're working very hard to, and we're looking forward to proving that as we get into production in the coming years. Last but not least, we're producing a lot of lithium at 24,000 tons per annum. We're also producing a lot of renewable power and heat for our communities. And that's really important, particularly as we move through a difficult environment. This is what a social license to operate looks like within Germany and in France, within Europe, that you can give something back. And in our case, we are providing a baseload energy project as well. And 29.1 million tons of LCE is a huge resource. That's globally significant, one of the largest in Europe. And this is important as we look at future projects within this reservoir. It means that we can expand and we can actually copy paste our phase 1 line project and grow as the lithium demand grows as well. So a really important chart when it looks at the numbers. I guess one thing we talked about towards the end of last year was that Vulcan and our Lionheart project really has started to establish itself as a lighthouse project within Europe. This is shown by the fact we're getting incredible support from a number of governments, both within Germany and Europe. But I mean, if we look at this in a bit more detail, I mean, the German government has really stepped up their support. The fact that we've become this strategic project, that's shown by the fact they've provided over 350 million euros. That's over $500 million Australian dollars in support from grant funding, both on the geothermal and the lithium side, and also having become now one of the largest shareholders within our holding group. This is a wonderful reflection of the criticality and the priority we get within Europe at the moment, and particularly in Germany. So, we're really, really glad and delighted to have them come in for that support. It didn't stop there, though. The EU more broadly also came in with the EIB, the European Investment Bank, coming in for a cornerstone investment of 250 million as part of the lending facility. And of course, we were recognised as one of the first projects to have strategic project status within Europe. So that also helps with future opportunity for funding as well. If you broaden ourselves as well, though, Europe, it's a big place. 450 million people. It's a large set of states. The other states were also supportive. We had the French, Italian, and Danish export credit agencies come to the table as part of the lending group, nearly 473 million euros. And then we had a huge set of commercial banks led by seven. In fact, it was a syndicate of predominantly European banks who came in for 640 million. That was a great way of showing how the debt was broken down. On the equity side, though, we had pretty much all European equity supporting us as part of the strategic equity. These industrial partners are also important because we've now got a situation where we've got equity coming from industrial partners, but they're also significantly involved in executing the project. In particular, Sedgman Hochtief, they will be the EPCM for the phase one project, and also Siemens, who will be the main digital and automation partner for phase one. And of course, we still have Stellantis and Hochtief. Both of them have come in and have been, stable. And now Hochtief, in particular, the largest shareholder on our register, with a further investment of 169 million. So you would have seen in the first slide that they're well over 15% now, which is a great signal for us as we grow the company to have such a significant, shareholder, but also someone who will be there with the journey as we grow. And last but not least, it wasn't just the Europeans. I get it. We also had international support as well, particularly from Australia and from the Canadian export credit agencies in EDC for 200 million and Export Finance Australia. So again, thank you so much to those that have contributed. But it does show that the project itself is incredibly important for Europe. One thing we're going to talk a lot about this year and obviously years to come is that obviously Lionheart is incredibly important. We've set up a cluster at our Landau area. You can see that on the right-hand side of your slide where we've got a number of licenses that we're targeting production from. But we've also got other clusters up and down the Upper Rhine. And the idea here is that we would like to design one and build many. There's huge benefits of that approach. Obviously, it's by designing one, we get the familiarity, we get a lot of lessons from the phase one, but it's also born in us to improve the capital efficiency of those future phases. And we've got the blueprint. The blueprint shows here on your screen already that we can move to an area called Ludwigshafen. It's where we've already got a partnership, an existing partnership with BASF, the large German industrialist, largest chemical company in the world, and they've got their largest operations here in Ludwigshafen. So here we're looking at a large heat offtake to be able to offtake the heat, which automatically tells you that we don't need power in that case, so we can actually save capex. And there's other capital efficiencies we believe we can achieve here as well. A similar story actually on the Mannheim side. So on the eastern side of the river, we've had a long-term partnership. It was actually our first heat offtake with MVV. It's the Mannheim utility company. And here's an example where we can offtake the heat, and then we can look at how we then, replicate the lithium extraction side. These are all things that are on our targets for this year, where we're developing them according to our development timeline, as mentioned in our 5-year plan. So we will talk more and more about these along the side of Lionheart. So this is the blueprint for Vulcan. We're going to develop future phases, particularly as we see the demand grow, and we're going to target them as fast as possible. Our aim is design one and build many. And there will always be a constant thing. We're always targeting lower capex and lower opex. Of course, we're already at the bottom of the cost of production, that opex curve, but we'll continue to strive for lower C1 costs as well. And the excellent thing here, and something that not all companies get the luxury of, is that our aim is to see 300-400 people involved in phase one transition into phase two and phase three, so that they bring those synergies, those lessons learned, and that's how we really see improved returns when we can start to see better projects in the future. So if I then distill that into really what are the investment highlights for the company, is that it will continue to be a low cost, sustainable, and where we can optimally try and target the EU market. We can do this now because we're bankable. We've obviously, we've secured the financing for phase one. It was a 2.2 billion euro financing package. Lionheart is now under construction, and I'll show you some lovely pictures in a minute. Our aim is clear. We're going to target production in 2028, and then we'll go up through our startup and ramp up period. We remain extremely important to the European EV market. I'll show you some numbers at the moment where it's absolutely skyrocketing within Europe at the moment. Clearly the leader of the EV demand in 2025. We will continue to remain low cost. We will continue to look at how we use our own technology in-house to basically keep that sustainable low cost outcome. We've got a huge resource, as mentioned, and we're going to look at how we enable future phases as we've got this 29.1 million tonne resource. So we're definitely above and beyond our phase one project. And last but not least, and we're getting a lot of inbounds at the moment, is how we continue to lead our offtake with Europeans, but also remain very focused with our offtake partners. So just to summarize where we are, as the broader Vulcan, it's a transformational time, no doubt. I'm sure you can see that. The securing of that 2.2 billion package was a huge accomplishment for the company. Really proud of what the team have achieved there over a number of years. And that's effectively now got us fully funded until we have first cash flow for Lionheart. Construction is well on the way. We can do that because of what we've seen. And as a summary, the lithium offtakes, they provide a huge, robust foundation. They're with leading customers. They're between 6 and 10 years in contract period, which obviously definitely help with the debt and allow us to move forward with real confidence that we've got offtake partners there in terms of revenue. Contract mechanisms are hugely important in this space because we've been able to achieve a lot of protection on downside pricing. And yes, the lithium price is doing very at the moment, but I guess we all expect there will be volatility over the next few years. So that's where we've got real protection with the offtakes. Being at the bottom of the cost curve is paramount to ride out the volatility as this lithium market grows over the next decade. Having low cost of production, we'll be able to see any price environment. Of course, we can do that because we leverage our own absorption DLE technology, the fact we've got a hugely high quality brine, and we've been able to create a compact supply chain. Again, having secured phase one, that's obviously the most important thing for the company at the moment. The financing secured, we'll be able to deliver our Lionheart project, but it was also the quality of the partners that we brought in that gives us comfort and confidence for our growth, people like Offtake. The German government and the European Commission have been huge supporters. I won't repeat that, but again, that's the type of support you need to get projects like this off the ground and obviously grow the company in the coming years. And of course, we've had a lot of support, mainly because we maintain incredible strong ESG presence and our credentials. Last year, having been named dark green by S&P Global across sustainability ratings, it was the highest ever for any mining and metals company globally. That's not by luck, that's by design and something that we need to make sure we can maintain in the future projects. Of course, geothermal energy being a huge part of that. So that's where we are. We're targeting lithium production in 2028. You can see on the right-hand side, we had a wonderful groundbreaking ceremony with hugely important dignitaries and European and German stakeholders from government and local councils. And this is the type of attraction. There's a lot of eyes on us right now. Now it's time to deliver. Just a bit on the lithium market, as we need to keep an eye on this. Anybody that's keeping an eye on lithium will realize that it's hugely dynamic, and we need to be aware of that. But I think we also need to be quite aware of the European context here. And within Europe, the battery projects are on the rise. Again, you'll see in a minute where we are with the EV demand figures, but this shows that the supply chain can be built out in Europe. The one thing we talk a lot about in Vulcan is that when we're looking at our offtake partners, we're working with partners who are already established and already in operation. That's really important from a risk perspective. So we're already off-taking to projects that are in production. We're not taking project on project risk here. What I think I like to see, there's a lot of the projects that were in 2026, they're now towards the end of their construction. A lot of them have actually gone into operation as well. So it really shows that between the raw material companies like ourselves, the cathode manufacturing companies that are obviously starting to grow and have future phases already developed, and then the cell manufacturing, you really see that Europe's starting to stand on its own 2 feet, which is a wonderful, wonderful signal for companies like Vulcan who can believe in that European supply chain as well. I guess one thing that is quite daunting though, is that there was a huge demand for lithium last year in Europe. I think well over 500,000, and you have to recognise that there was still zero supply. And that's where Vulcan becomes, increasingly important. And that's why you see the European Commission having more and more initiatives to make sure that we can support that supply chain. We'll talk more about that in the coming months and probably at the next webinar, where we can start to show you where Vulcan is really starting to drive some of these initiatives, where Vulcan will be supporting a European made or made in Europe incentives with local content and other things in relation to how you look at stockpiling, things that you hear a lot across the rest of the globe. The European community is also moving forward with these initiatives as well. A little bit on the EV demand, and I think we talk a lot about EVs. Where we also need to be keeping an eye on is the stationary battery systems, BESS. In many cases, jurisdictions are growing both with EVs and both with BESS, and some they're not, like the US, where they're not growing with EVs, but they're heavily growing on the BESS side. I guess Europe last year, and these facts and figures have been confirmed, it's the first time they sold more electric vehicles than internal combustion engine vehicles in 2025. What an incredible signal to say that you're now selling more electric vehicles than you are combustion engine vehicles in Europe. So that's a wonderful signal. You've got lots of incentives coming back through government. I mean, Germany was an incredible growth last year, nearly 43% year-on-year growth through Germany and other parts of the UK. But again, the writing's on the wall. The northern part of Europe, is moving on towards 100% of all cars sold are electric. As you're moving further south, you're seeing larger and larger numbers across the two big economies of Germany and France, even on the UK, and now you're seeing it through the southern states as well. So again, the writing is on the wall. The tipping points are well and truly gone. It's an electrified state. So when you've got nearly 500,000,000 people in Europe, you can see that the lithium demand will need to follow that EV demand. So we'll talk more about that in the coming webinars, where we've got more and more data coming from 2025 as well. I think you guys have seen this before. We are supplying a European auto industry. That's why we've been really, really focused on key counterparties that we know can not just take the volumes, but want more volumes, and they will be leading the supply chains over the coming years and coming decades. We're fortunate the likes of Umicore, one of the largest, cathode makers in Europe. Same with LG, one of the largest cell makers in Europe, and Stellantis, of course, one of the largest automakers in the world, but definitely in Europe. And having these, a variety, it's, having this, difference between cathode makers, cell makers, automakers, and now with Glencore Trader, that's enabled Vulcan to have a difference in the way we've set up the pricing mechanisms. So this basket of mechanisms that's by design, and I think we've been really well commended from our partners that we've got this diversity, because what it does is that it gives us protection, particularly from price floors and fixed prices, but also gives us an opportunity to tackle the high side as you see lithium prices go up. This gives overall a very strong break-even price, which is something you need when you're doing project financing with lenders. But it also gives Vulcan a really strong platform to deliver on, knowing that we're always going to have a very low cost of production and always have a high pricing environment from our contacts from our contracts. So again, I think we're definitely a good example of how to set up these price contracts for others. And again, as talking about revenue, where Vulcan has put a lot of effort is in our integrated supply chain. By the fact we've got this hugely low cost project, it's based on the fact that we are using our own ADLE technology and the fact we've got a world-class brine resource. These things enable us to remain at the bottom of the cost curve. So yes, when prices are tough, Vulcan will always ride out through those environments. So I think something we're very, very proud of. It keeps us hugely competitive. We don't need subsidies from other people because we are competitive. So we'll maintain that C1 position on the curve and obviously try to improve that as we get into production and future phases as well. So again, something that we obviously not gloss over, but something to note on that those first two quartiles, you see a lot of blue, whether it's the turquoise blue and the dark blue. That's because brines are the way to create low costs versus a lot of the hard rock operators that typically will be slightly higher costs on the cost curve. And one thing probably new to our shareholders is something that we remain quite flexible in the way we look at lithium. We're quite agnostic, to be honest, to the market. We are positioned to deliver different lithium products depending on what our clients need or what the market needs. Project Lionheart is set to deliver lithium hydroxide. That's because in Europe, nearly 95% of cars, or at least the cathodes that are being built, are using lithium hydroxide predominantly through NCM. But it doesn't mean that we need to produce, hydroxide for the rest of our lives. In fact, we've got good discussions with a lot of our partners that that's something we could switch in the future, depending whether carbonate becomes more important or whether you look at the type of battery technology, LFP, or even solid state. The important thing here that we want to sort of message to you is that the precursor of all these technologies, so whether it's lithium hydroxide, whether it's lithium carbonate, or whether it's solid state, the precursor to all of them is typically lithium chloride, which is where we've got our technology. Of course, with our Voltec and our Volsorb technology, we're producing lithium chloride from our extraction plant. So yes, gives us a huge flexibility as we grow the company and as customers want to see different products as well. So we just wanted to highlight that to you. We thought it was an important part to show that this is very flexible as we think about future market updates. And it's a real pleasure to show you Lionheart in a bit more detail before perhaps we move into sort of Q&A. Obviously, a real passion and a real focus for the company is seeing how Lionheart is going to be developed and delivered. I put a lot of pressure on our execution team in the last few weeks as we took FID in early December. The aim was us to get to a fast start. People will probably remember we've been working with most of our engineering partners for years already. So whether that's the Sedgman Hawk TIFs, whether that's the Jaw Proxes, whether that's the Nessies or the ABBs, and we've been working with them for years. And because of that, we were able to basically release our notice to proceed with all these partners, kick off meetings, and get going. Lots of other projects, they can't do that because they're bringing new partners in from FID. That's not the case with Lionheart. We've been working with our partners for a long time. And so the gauntlet was set, fast start. And you'll see that already that we are moving very, very fast with engineering, procurement of long lead items, but also on the ground. And in front of you, you can see a few of those. So we've got the groundbreaking on your top left. Earthworks have already started at our main, centralized upstream geothermal lithium extraction plant. We're starting to reroute one of the main power lines. And of course, we also had a very successful start to the drilling campaign. That's what I wanted to quickly highlight today. We've got a natural resource. A field development plan is there to basically, develop that natural resource. Most people know we've got 4 wells already in production at Landau and also our Ensign geothermal power plants. But we drilled our first new well. We haven't drilled in a while with our new drilling organization and our new drill rig V10 and Vercana. And it was wonderful to see. It was our first new well. It's the 5th well in the total field development, how strongly we performed across the board, both in drilling performance, looking at the reservoir performance, and finally looking at the flow performance. So, look, we had a lot of people, interested on how we were going to see the flow rate performance. We drilled LSC 1B towards the end of last year, and in the beginning of this year, literally the first week, we went through a multi-step production well test. And what that showed is that we had productivity indices of around 2.1 to 2.5 liters per second per bar. Now, what does that mean? Because we maxed out the well and the test skid, we have to use that potential. But what it means in reality is that it looks like we've got a capacity of that well of around 105 to 125 liters per second. That is hugely exceeding the field development plan. We were very humble in our recent announcement. In the field development plan that we have, we are targeting around that 84 to 95 type liters per second. So for us, this is a wonderful start. Of course, we will see some variability as we drill the remainder of the 23 wells, but this is a really strong start. And it tells us that we know how to target the reservoir. So yeah, really, really delighted. But it wasn't just the flow rate that was from performance perspective. We were able to confirm a lot of the thermal, the geothermal heat grade was on track and met expectation, and also on the lithium grade, that was also on track and actually slightly above expectation. And importantly, the reservoir quality, particularly in the matrix sands where we saw strong and probably higher permeability, that's a really good indicator that we're able to deliver on the FDP. So I guess the message for you guys is that the field development is on track. We've got a lot of wells to come, 23 wells. We're going to be mobilising our second Vercana rig in the second half of the year, so V10, and we'll be targeting a new well site, and we'll be under construction very, very soon of that new well site. So we'll keep you posted on how we go, but it's a really good start, and that's all you can ask for in this type of environment as we go through developing the field development plan. Our development timeline is pretty critical. We know what our critical path is. You've got a lot of subcritical paths here, depending if you're looking at pipeline scope, whether you're looking at lithium extraction, the power plant, or the central lithium plant. But all these contracts have been kicked off. So we know the critical path pretty much runs for the lithium plants. So we need to get going right there. And again, we're starting with a lot of engineering, a lot of procurement, and we'll be on site very soon for some topsoil removal. But what this all leads to is effectively us being ready in 2028 to start production of Lionheart. So really, really exciting. We want to get off that fast start. That's the best way of protecting ourselves against any delays. And I think we're on track at the moment. So, but we'll keep you posted as we move through the year on Lionheart. And I guess for us, and I mentioned it at the beginning, is when you put this all together, we've been working together for a long time with all our partners. And there's a lot of credibility here. They're highly credentialed. Every single partner here has been working on a very analogous type project, whether it's in the upstream, whether it's in the drilling, whether it's on the lithium side with your Proxa, ABB or Siemens. This is what they do. So we've got these world-class tier one partners who are working with us, of course, eventually to basically sell the lithium product to our offtake partners. So delighted to have the quality of partners that we have within the company. Nothing's changed here. We've been quite stable here with the management team, the board of directors. So with Francis, myself, and Felicity as executive directors, and Angus as our lead independent, and Josephine, and Dr. Heidi Grun, and Dr. Gunther Hilken as well. So last but not least, before we finish up, I wanted to give you a bit more view on future Vulcan. I know we've presented this previously, Francis and I, but it's important for us that you do know what our levers are for growth. And these are really going to start to crystallize in the next 12 to 24 months as well. We've spent a lot of time predominantly to grow Voltec for onshoring and protecting our own business case. But of course, what's become apparent now is that by Vulcan producing Volzor underneath our Voltec business, it's really now unlocking this low-cost Western supply chain. It's a high-performing direct lithium extraction sorbent, and we're getting a lot of inbounds because a lot of people are worried about some of the geopolitical aspects, what's happening in the US, what's happening in China. And so for Vulcan to now having, grown and now secured that and actually producing this in Europe becomes a great option on how we actually commercially deploy that. I know France is spending a lot of time in this space as well. So this is something we're looking at, and what does it mean to commercialize this technology? And Vercana, of course, they're going to be very, very busy drilling our first 24 wells. But the fact is, we've now got an excellent asset there and an excellent, capability to continue to be able to deliver on success for phase one and future phases. Talking about future phases, the ones that we've talked about the most because they're most advanced, predominantly because we've shot 2D seismic and 3D seismic on Mannheim actually, is how are we going to progress these through our development funnel? Remembering this is what we've just done with Lionheart. We've taken it through a development funnel. We've gone through PFS and DFS and bridging until we got sufficient value and obviously the level of financing to get that to an FID. That's actually what's the next steps for our phase two and phase three resources. So a lot of work happening in this space. A lot of us are leaning in as well. Of course, we're ruthlessly focused on phase one, but of course, we're a development company as well. We will continue to grow. We've got a really healthy license position at the moment across our 17 licenses. So it's now really looking at what is the next best project for Vulcan, what provides the best returns, the most capital efficiency. That's what we're working on right now, and something we'll be able to communicate later in the year. And as mentioned, Voltec does become really, really important. Again, not just for phase one, but unlocking value for the company, in future phases and future jurisdictions as well. We'll continue to see how we can market this, commercialize this, but it's something that we'll keep you abreast of as we move forward. It's performing very, very well in our own demonstration plants. The fact that it's bankable, we've had hundreds of lenders, advisors, and other strategic advisors crawl all over us. And to get to the point where this is now bankable, the fact that we're actually now building Lionheart is testament to how far we've come with this technology. So we're very, very proud of it, and it gives us a very favourable position moving forward. So we'll continue to give you updates on how this transpires over the coming weeks, months, and years. And again, we talked a bit about Vercana, and this is a really important part, particularly when geothermal drilling is becoming more and more popular within the European sphere. Having access to rig and having access to people becomes, quite a challenge. So again, we're great that we've been able to, look forward and our own supply chain secured by having the Vercana group drilling our wells. And probably a summary for today of where we are. It's a busy slide. I do apologise. Sometimes we'd like to think about what does Vulcan look like on a slide. Effectively, we've secured financing. That's the most important part. Construction has started. The growth of it is ahead of us. We've done so much work, so much effort, and so much support from our loyal shareholder base as well that we've got to the point where we can now start building phase one. But that is only one. It's only phase one, and I think for us, we got there because of huge, innovative elements of sustainability, that low cost of production. But the fact we started becoming like a lighthouse, a beacon, where the German government started supporting us with huge grants and equity. The EIB cornerstones. We then had huge strategic partners in Offtake and Siemens and Demeter come in, both at the project level and at the listed company. And of course, it should give people confidence that we can replicate this in future phases. So yeah, we feel we're very, very proud as a company. We're very proud to have the Australian European link, and now it's born on us to deliver. So I think we'll leave it at that. I really appreciate you staying with me. Happy to open it up some Q&A as well, and see if I can help you understand a bit more about the Vulcan story and where we are. Okay. So we've got a question from Russell Weavers. How and when can shareholders expect to start getting a return on the investment? I should be worth noting that more than 12 months ago, share price was 13, today $4. Yeah, not sure the share price in the last 12 months was $13. But of course, our journey is a journey. Obviously, getting to this point was hard work. Obviously, trying to finance a lithium project at the bottom of the market, bottom of the price, quite challenging. But I don't know if anybody else has actually done that. So I think we should give credit to what we've been able to achieve to date. And again, we wouldn't have done that without your support. Loyalty for us means hanging in there, watching us deliver phase one. We really believe there's a number of re-rating elements in the coming years that obviously will provide real return and shareholder value to our shareholders. So very much looking forward to delivering phase one. That's obviously critical, but obviously being able to show there's other growth levers in the coming years. So thanks, Russell, for your question. And yeah, we'll obviously continue to deliver for the shareholders. Saranga, with only 2 drill rigs, isn't 23 going to take many years? No way that you'll be in production in 28. Is that a fair conclusion? No. A good question though. We are using our 2 rigs to drill, but we're also contracting other rigs to drill at the same time. We didn't see value in buying more and more rigs. There's obviously there's a point where you don't have the return for the value. So we've got our 2 rigs drilling full time, and we are contracting a 3rd rig. There's also a small rig that can drill at Landau. So the broader field development won't be just drilled by 2 rigs, and that enables us to get to 2028. Also, we don't drill all wells before the end of 2028. We drill all the wells we need to start production, and we will complete the drilling towards the end of 2028 into early 2029. So that's how we achieve the field development in time to meet our ramp-up profile. So you don't have to drill all wells before the end of 2028 to deliver on production. But great question. Why is NPV down 44% from your presentation 1 year ago? That's pretty simple. That's lithium price. So predominantly when you're updating and you're obviously running financial models and economic models, we are heavily leveraged to the lithium price. When you run from a lithium price of 15, 16, 17,000 as it would have been a year ago, a year and a half ago, and then you're looking at lithium prices, at the end of last year, probably 10,000, and prior to that, probably 8, 9,000, you're obviously going to have a huge impact on MPV. That is what drives the value the most. Obviously, we've got lithium and energy sales, but the lithium sales dwarf revenue quite significantly. So we are obviously tagged, and we are in parity with lithium price. So as much as we've been able to shelter that and insulate that a fair bit with our pricing mechanisms, we can't shelter everything, and that's something that will always be leveraged against. So that's the main part, Martin. Saranga. Also, vol ready value is beyond phase two on right, and from phase one to phase two, what sort of time it can be accepted? I think I understand the question. So phase one, as we know, Project Lionheart, we're in construction right now, looking to basically have that in production towards the end of 2028. The way we see phase one and phase two, or even phase three in our business plan, is that we're looking to grow every 2.5 to 3 years. It's sort of what's been the strategy for a while within the Vulcan Group. Why do we do that? For a number of reasons. We've got this, large, execution organization, the engineers, supply chain, construction, and they'll be finishing off phase one towards the back end of 2028. So the idea would be that we then transition that talent, that experience, those lessons into a future phase. So most of our current exploration programs and what we're doing in the development side is looking so we can take that type of decision towards the end of 28 into 29. So then you will obviously then have an execution timeline after that, and that's when you start to move into production. So, but circa 2.5, 3 years, that's our goal. We'll see how we go, whether you accelerate or whether you decelerate, but that's actually what we're trying to achieve in that current development timelines. So thanks for that question, Saranga, as well. Real value. Okay. Yeah. Real value. I mean, for us, we're obviously using discounted cash flows. And one of the things we need to continue to see, like looking at lithium price, looking at where the volumes are, looking at where the demand is. That's how we'll obviously look at how we look at future phase developments, making sure that we can develop them on time, on budget, but also trying to make sure we can deliver to our offtakes. Our offtakes are binding, so we need to deliver according to those offtakes, and we also have, the potential to sell offtake volumes for future phases as well. From Saranga as well, for phase two, do you need to raise more or going to use profits from phase one? We'll have options actually, Saranga. So this is one thing that's extremely important to the Vulcan Group at the moment. We've obviously fully funded phase one. We're looking right now at how do we potentially support a phase two development. That's both through debt and equity. We could look at how we look at revenues. If we do a really good job in executing phase one, there's probably even value there that we can use a lot of the value that wasn't spent on phase one, and how then potentially can we use that phase two. We could bring in more strategic partners. As most people are aware, we've got strategic partners in phase one. A lot of them are very keen to also be part of phase two. And then we also look at new strategic partnerships as well. And of course, our job is to continue looking at grants, the government. Ultimately, what we're trying to do is reduce the impact and look to not raise further capital. We would like to try and do as much as what we can with what we have. So that's obviously a key part of where we are at the moment. Is obviously it's a few years away, but we're a different company now. And how do we use our existing partnerships, our existing shareholders, particularly at the project level and at our holdco, and any other partners that want to come in? We really built quite a credible, phase one project. A lot of people are quite keen to look at that. So we'll obviously keep an eye on how we best raise capital in the future for the company. Trevor Watson. Hi, Chris. You mentioned flexibility in end product supply type to deliver lithium carbonate rather than lithium hydroxide. So what does that flow sheet look like? Actually, it's a great question, Trevor. The flow sheets are quite similar, at least the upstream. So in the upstream, it would be almost identical. So you would drill 24 wells, the pipelines. You would use ADLE, absorption DLE. You would create a highly pure lithium chloride. And then for carbonation, you would create a carbonation route. So you can then use a form of carbonation through CO2 to then create a carbonate. almost identical to what Rio Tinto are doing in their projects in Argentina at the moment. So then there's that final step, which is more of a carbonation step, and then they'll use crystallizers. We do that right now with hydroxide, except instead of using a carbonation circuit, we use electrolysis and then we use the crystallizers. So they're quite interchangeable if that's what you're doing from a greenfield perspective. We've actually also done a study as well where we can actually take the lithium hydroxide and you can actually add another unit operation and actually add a carbonation unit to the back of the hydroxide and make that lithium carbonate. So we've actually got flexibility whether we operate phase one under that flow sheet or future phases as well. So we've done a pre-feasibility and early study, like a concept study on that. That's how you would do it. So very, very common to go from chloride to carbonate or chloride to hydroxide. Oh, sorry, Russell. Yeah, you said the year before, so I was just being accurate. Yeah, 2021. I wasn't at the company then. $13. Yeah, there's targets there. We've got targets. A lot of our analysts are targeting $10 plus as well. That's our aim. Our aim is to return as much value to the shareholders as possible. To do that, we've got to deliver these steps. We've got to deliver phase one. We've got to prepare for phase two, phase three, growing our technology. That's where we want to do. And if we do that, we do believe we'll be seeing, value like that and share prices like that in the past. Of course, $13 was a great run, early days as a development company, but we're a lot more credible these days. We're a lot bigger, and we've obviously done a lot more work. So we'll continue to try and deliver and meet the expectations of our shareholders as well. Thanks, Russell. After skyrocketing lithium prices in the last weeks, your NPV value must be going up significantly. Thank you, Martin. We don't run our financial model every week or every month. Our focus at the moment is still to continue delivering phase one. Of course, the lithium price rally has been great to see. Obviously there was a lot of prediction about that forecast from a number of the forecast agencies, whether it was 26, 27, 28. We hugely believe in Vulcan that the structural deficit is going to be there within the back end of the decade. You can see just with the demand. If you follow standard macroeconomics here, I mean, Europe has still got a huge growth and demand and still supplying zero. So, of course, if that's happening globally in China and other parts, the demand is not keeping up. So demand is outstripping the supply. So I think you'll continue to see the lithium price. There will be volatility, but if you do see those prices, yes, our NPV is of course going to go up. So as mentioned, we are heavily tagged to the lithium price. So let it rally. I'm sure there will be again volatility in the next years and decade, if not. But Vulcan's main aim is to deliver on time and budget with that low cost of production. Peter, when do you expect to announce more drilling results? Great question. We're skidding over. We've just moved on to our second well on the Schleiberg well site. So that will be another well we drill over the next few months. So I expect probably towards the middle of the year. We're also starting to construct our new well site at a well site called Trappelberg. So it will probably start drilling probably in early Q3. So yeah, we'll keep the market abreast. We obviously will have the two rigs, and then there'll be a third rig coming online, I think, towards early next year. But that's sort of the sequence. We will be drilling 3 to 4 wells this year. So there'll be a lot of wells every 2 quarters. We'll probably have an update on well results. No, please don't be sorry, Sarah Ganga. No problem at all. I had to ask this: with funding done, what is the next most difficult task ahead of you? Can this project collapse if other drilling don't go as planned, or find issues with one or a few drilling issues? Also, what's the average time to drill one well? Look, we're risk managers. That's my job. The team we've assembled in Europe, this is what we do. And most of us have got a similar background to me, 25, 30, 40 years in executing these exact upstream integrated projects. Drilling is one component. Of course, we've had a really great start. We feel very, very confident with the subsurface. I don't think we would have received 2.2 billion if people weren't confident with the subsurface. The reservoir, the Bunter sandstone, is a very homogeneous sand. It's a big bathtub that runs up and down the Upper Rhine Valley. We've got strong seismic interpretation, 3D seismic. We've calibrated that seismic to the wells that we've drilled so far and produced. So we feel very, very confident. Whether we produce 100 litres, 90 litres, 120 litres, there will always be some range there, but the reservoir's there, the bunter's there, the brine is 100% there. So it's not something that you drill and you don't find. We feel quite comfortable, but what you want to do is make sure that you're drilling the best well. That's on time, on budget, safely, and targeting, the best part of the structure. And we believe again through our seismic interpretation, which is extremely well calibrated now. We wrote that in our announcement. We're only a few meters away from the expected target after drilling 3,500 meters and then being 1 or 2 meters away from your target. It tells you that we're in control of the drilling process. So again, there will always be surprises. We're risk managers, but you've got 24 wells. So even if you had 1 or 2 bad wells in 24, that's okay. We've accommodated that within the FTP. And in terms of drilling one well, it all depends. So we're looking for continuous improvement with the drilling program. So our first well may have taken, 100 days, 110 days. Full expectation is that that starts to become, 100 days, 90 days, 80 days, until you get to a point where you've maxed out your ability to learn and improve. So, by the end of the program, you're probably drilling wells, 60, odd days. That's the point. And there's a lot of data about that, whether it's in the US, in Australia, when you're drilling for coal seam, you're punching these wells and you see that improvement through the rig and the time. So that's obviously this continuous improvement, this learning curve you get through the drilling. So you start more conservatively and then you obviously start to drill a lot faster towards the end of the program. Okay, well, that looks like the rest of the questions. Thanks again for those who had participated, and I really appreciate all the open dialogue here. Again, we're going to be a lot more communicative in the coming weeks and months. We're back into a more stable period where now we've got very clear vision of what the next steps are within the Vulcan team and the Vulcan group. Lionheart will be dominating probably a lot of the press as we start to execute on this incredibly important project for Europe and for the world. But we'll also continue to see our growth through our pipeline of other projects. And of course, we also have Voltec that will be, looking to commercialize. So we'll keep you posted. It's great to see you, and looking forward to the next update. Thanks a lot.